Good morning, good afternoon, and good evening from whichever location you are watching me from. My name is Donzo of Donzo Lore Accountancy Tutorial. Today I'm going to go through a double entry bookkeeping. This is the basis for the preparation of financial statements. To have a good financial statement, you must have a sound double entry procedure in place. In compiling this financial statement, as I said, a very good system of bookkeeping has to be in process. The all-important statement culminates from sound double entry bookkeeping. This will result to the production of balance sheet, which is now known as the statement of financial position, which presents the net worth of the business. The net worth of a business is the result of value added to it by using its resources. Now, what do I mean by value added? Value added, this is the result of operations reported in the income statement, the profit and loss account, which is then reflected in the equity. As you can see, my color code here, green reflects to the equity in the balance sheet. Everything here on the right hand side is balance sheet. So your operation, the value added will come from income statement, whether good or bad, will be the benefit of the equity. So if it's a profit, it will increase the equity worth balance or the value of the company. If it's a loss, it will deplete the value of the organization. The statement of financial position is defined by the fundamental accounting equation as asset equals to liability plus equity. Asset equals liability plus equity. Color coded again, asset in the balance sheet are this gray one here, asset. Liabilities are the yellow one here, current liability, non-current liability, and equity is a green one here. Left side and right side must balance. So total assets must equal total liability plus equity. Stemming from the asset in the previous slide, assets are the investment in items that will yield benefit over time to the entity. Those with benefit crystallizing under 1 year, for example, inventory, are termed current asset, while those whose benefit accrue over 1 year, for example, plant and machinery, are termed non-current assets. Now, on the other side, liability. These are funds or money owed to third party that are applied to finance the business. Every business will need funds at one time or other to finance its business. The liability are those that are money owed to third party outside the business. Those that are due for repayment under 1 year, for example, short-term loan, are termed current liabilities, while those that are repayable over 1 year, for example, mortgages, are termed non-current liabilities. Now, ownership, equity. These are funds, money invested by the owners of the business. They could be at start of the business or injection at a later stage to help sustain the business. This could be termed capital, where the mode of operation is by sole trader or partnership. It could be termed share capital, where the mode of operation is by incorporation by the issue of shares. So equity ownership could be either as a sole trader or partnership or as an incorporation where shares are issued, okay, to help run the business. Having gone through assets and liability, and then the income statement, which we have condensed to be the value added through operation, transactions has to be recorded. In accounting transaction, every debit entry must have a corresponding credit entry and vice versa. So if an entrepreneur, for instance, Jones, start a business as a sole trader and put into the business 25,000 from personal savings account, this will require at least 2 entries to be posted from the general journal to the general ledger account. Thus, we are now doing the double entry bookkeeping. From the example in the previous slide, okay, the entrepreneur Jones is the giver, and the bank account of the business is the receiver. So, we debit the receiver and credit the giver. So, in every transaction, one party is given and the other party is receiving. We say thank you, give thumbs up to the giver and credit them, and then we debit those receiving the benefit, the value. Now, looking at Jones' transaction, okay, the general journal, a typical general journal will look like this. There could be different versions, but this is a typical one which contains vital columns. Very important ones are the date, column 1, code, column 2, transaction, column 3, account items, column 4, action required, column 5, and then column 6, amount required. The last column here is just as a to-do list to tick whether the entry has been posted to the general ledger or not. So the first column, the date, we give the date of transaction, 1st of July 2024. The second one is code for audit trail purposes, in case of you need to check or identify where items are coming from. So column 2 is a code N001 for argument's sake. It depends on how you want to code your transactions. The third column is the transaction itself. So here, payment by Jones on 1st of July 2024 of 25,000 from savings account to the business account. So the account items relevant to this particular transaction will be 2. One of them is the bank account. I always like to start with the debit account, the receiver, and then the capital account, the giver. So we debit the bank account for receiving 25,000 from the capital account, the giver of the 25,000. So when it's posted to the general ledger, okay, I will tick here that's posted to make sure that every item is posted, leaving no stone unturned. As the business is a going concern, it will continue to transact business activity, majority of which will be financial. As this will be recorded, all this will be recorded in the general journal for posting to the ledger account. See additional transaction N002 involving furniture below. So we have introduced another transaction here on the same date. So the second transaction, which is N002, is Jones purchased furniture from IKEA for $540, okay, by cash. So the receiver here again is the furniture account, which will be debited, and the giver now is the bank, which need to be credited. So we debit the furniture account with 540 and credit the bank account with 540. This is making sure that general journal are well kept. It's like a diary. Everything that happens should be recorded. Going on again, as I said, in double entry bookkeeping, every debit entry must have a corresponding credit entry and vice versa. However, some transactions might require more than 2 entries. A typical example is a transaction involving VAT. Assuming in the case of the furniture purchased by Jones on the 1st of July 2024, the payment was inclusive of VAT 20%, then the net would have been 450 plus VAT at 20%, which is 90, and this will result to the gross amount of 540. This is the breakdown here. Okay, the item line net value is 450, VAT at 20% is 90. Add these two together, we give you the gross amount, which is 540. Now we need to take that VAT into account and recompute and enter this transaction the way they should appear in the general journal. That's why I've highlighted in gray. This were the relevant area here. So this particular thing, everything remains the same. The date, the number, and the transactions remain the same. What changes here is the account item. We need to debit the furniture, just the net value, not the total, net only. And VAT account will be debited with the VAT element, £90. And the total will now be credited to the bank account. In businesses, only the final consumer suffer the VAT. Businesses that are VAT registered, as I said, they're VAT registered, will only pay over VAT to the custom and to the custom and excise if they collect more in terms of sales revenue, the VAT on them, to the inland revenue or to the custom and excise. So the VAT will reduce the amount, the VAT due paid will reduce the amount due to the VAT account. Right. This is just a brief one on double entry bookkeeping. If you have enjoyed this tutorial, please give us a thumbs up, like it, and please don't forget to subscribe. It doesn't cost anything to subscribe, okay? And please don't forget to share so that others will benefit from this tutorial. I thank you all for listening, and I'll see you in my next tutorial. Bye for now.